There is real panic on the United States currency market right now because, according to economists, Trump has brought the dollar down to a historic low. After a series of unsuccessful trade deals by Donald Trump and a United States Air Force operation in the Middle East, the American dollar has fallen to a 3-year low, while global stock indices have reached a second record high in 3 days. On Thursday, after reports that Donald Trump plans to urgently replace the head of the United States Federal Reserve, which fueled bets on lower interest rates in the United States. In general, let's figure out what's happening with the dollar right now, because I'm sure you've already seen the news that the dollar is really just plummeting. My name is Aleksei Pechiy. Today is June 26th. Let's go through everything step by step. But before we start, I ask you to subscribe to this channel, give it a like, leave any comment you want, and be sure to subscribe to the Telegram channel. The link to it is in the description of this video. There we post breaking news as soon as it comes in. So today the stock markets are sounding the alarm because of the incredible drop of the United States dollar. According to reports, the sell-off of dollars continued after it was reported that the United States president is urging the Federal Reserve to lower rates more quickly. He is considering the idea of choosing a replacement for Federal Reserve Chairman Jerome Powell in the next few months. Before his official resignation in May next year, Trump and Powell have already had a long-standing conflict, as the head of the Federal Reserve is in no hurry to lower rates, being convinced that this will inevitably lead to a recession. By the way, even Donald Trump's own man, Treasury Secretary Scott Bessent, has already carefully warned about this. But this doesn't stop Trump, and he is confident that his trade war will only bring pain to the American economy in the short term. And after that, everything will get much better and the golden age will simply begin. He says, yes, there will be a blow, it will be noticeable, but it's worth enduring a little, tightening our belts, and everything will be fine. Not today, but tomorrow. Powell absolutely disagrees with this. The very statement that the head of the Fed could be replaced has already led to the dollar falling by more than 10% over the year. If this continues in the coming days, it will be its biggest drop in the first half of the year since the beginning of the 1970s, and in fact the era of freely floating currencies. But for Europe, this is actually a good sign. I'll explain why. European stocks rose again amid signs that the ceasefire between Israel and Iran is being observed. And the leaders of the European Union are preparing to lay out their position on trade tariff negotiations with the United States ahead of the deadline set by Trump on July 9th. And now you can really see how over the past month the euro as a currency has only been strengthening against the United States dollar. Well, and as economists are saying now, the most striking thing about the dollar's trend over the past 6 weeks is that in almost any market environment, the dollar is struggling to strengthen. And this may indicate a certain structural decline where any negative statement already causes a shock. And investors are now the most negative toward the dollar since the pandemic. This looks like a terrible situation because no matter what happens in the market, it's very hard for the dollar to strengthen. At best, it can just freeze and not fall, but it's very difficult for it to actually strengthen. Europe, meanwhile, is still rejoicing. Euro traders were encouraged by the results of the NATO summit on Wednesday, where member countries agreed to allocate 5% of gross domestic product to defense, with 3.5% going to troops and weaponry, and 1.5% to softer measures related to defense. All plans to spend 5% of gross domestic product on defense are spread out over 10 years. So in Europe, the markets are feeling pretty good, and in Asia, by the way, things are also going well. The Tokyo market jumped almost 2% to its highest level since January. Meanwhile, the broadest stock index of the Asia-Pacific region outside Japan also went up. So, as you can see, the European and Asian markets have recovered from the shock of Trump's trade war. They've adapted, they've taken precautions, and things are stabilizing for them. But the United States dollar really went down. Going back to the currency markets, the Swiss franc has strengthened to a 10-year high, while the Japanese yen has also strengthened again to below 144 per dollar. In short, right now, it looks like almost all markets are doing well, but the American one is really struggling. Expectations are now rising that the Federal Reserve will soon cut interest rates again in the United States after recent mixed data. However, criticism from Trump towards the Fed for not acting quickly enough is also increasing, and Trump has repeatedly criticized the head of the Fed, Powell. And his idea to name a successor long before Powell leaves his post actually casts a shadow over the head of the United States Central Bank as well, which could undermine his position. And now it's already obvious that the candidate Trump will choose to replace Powell. Well, when that happens, we'll take an extremely dovish stance and, of course, will support Trump's entire program to lower interest rates. But nothing good will come of this anyway. It looks like there is no good way out at all anymore. The problem is that if Trump replaces Powell before May of next year, when his legal term ends, it raises again the questions that were brought up at the beginning of the year about the independence of the Federal Reserve System, which, as we've seen, undermines trust in the Fed and the United States dollar. That is, when investors see that the Fed is being controlled by the United States president, trust in it drops sharply. Because right now, Powell, as the head of an independent body, doesn't give in to any blackmail from Trump. And he says we'll lower the rate when it's necessary to do so, while Trump says no, it should have been done yesterday. That's what independence of the body means, and it allows the market to be more or less balanced. When a Trump person is at the helm of the Fed, it will be hard to trust this body. Right now, the dollar index, which measures the value of the American currency against 6 other currencies, is at its lowest level since March 2022 after its decline. This year, the markets are also closely watching as the deadline set by Trump for July 9th to conclude trade agreements approaches. Otherwise, sharply increased tariffs on imports to the United States will come into effect. And here are the data from the tool. Traders are now assessing the probability of a Fed rate cut. At the meeting at the end of July, it's almost 25% compared to 12.5% last week. The yield on 2-year United States Treasury bonds, which usually changes in line with interest rate expectations, fell by 1.5 basis points to 3.8%, which is the lowest level in the past 7 weeks. As for commodities, oil prices rose on Thursday after a sharp drop that followed the Trump-brokered ceasefire earlier this week between longtime Middle East rivals Israel and Iran. Brent crude oil futures rose to nearly $68 per barrel, but overall the trend for the American economy is absolutely negative right now. I'll leave it at that. Share your opinions and conclusions in the comments below this episode. Subscribe to the channel, hit the bell, and don't forget to like. That's all for now. Take care of yourselves. Bye, everyone.